Thanks for joining us today on Market Call. I'm Morella Fernandez. Keith Richards on the show, President and Chief Portfolio Manager at ValueTrend Wealth Management. He'll take your questions today for technical analysis. Here's how to reach us. You can give us a call at 1-855-326-6266. You can send an email as well, marketcall@bnnbloomberg.ca. Good to see you.
Always good to be here.
Let's talk about some of the trends you're seeing. I'm wondering, because of all of the whipsaw reactions we've seen since Donald Trump has been in office, whether there is a concern it changes the overall pattern of some stocks in a different way.
Well, this is really interesting. I couldn't hardly wait to get on the show today because, I've been doing BNN for like about 30 years, and Market Call about 25 of those years. So been here a few times. And always we had to write these market outlook, and you guys get them. And I always write them about a week before I come on because I'm too busy to do it the day before. So I wrote the one last week, and I'm a fairly quantitative analyst. I use a number of processes that I've done over the years to assess risk on the market. And the write-up that I have today was written a week ago, and I said there's higher risk in the market, and here's the reason. Now, I didn't know Iran was going to happen, right? But I did know that there's risk. So I always say I'm going to give a little explanation of how sentiment, like when we're reading sentiment and market valuations, it's like a balloon. So if I have a party and you and I are having a party, we're going to blow up a balloon for happy birthday person, right? If we blow it up too low, it's kind of underinflated, so it needs more air, and it doesn't look too good. If we blow it up just right, the balloon looks wonderful. If you blow it up too high, it gets really, really thin, and then somebody walks by. I'm wearing cufflinks, little duckling cufflinks today. If I walk by with my ducky cufflinks and I hit it, and everybody's going to blame me on popping the balloon, but it was actually too high to begin with. So yes, Iran is going to affect the markets, obviously, but the market was just looking for a reason to sell off a bit. Okay, so that's and I wrote this a week ago, and I said, we're holding 20-odd% cash and this and that because we knew sooner or later something had to happen. So I view this Iran thing as, yes, it's something couldn't be predicted, but it's an event that was likely to cause, something was going to cause duress on the market. The market was set up that way.
Okay, so, but you also based your outlook on the fact that it's a midterm election year. What also weighs into that? Yeah,
there's all these factors. So sentiment was too bullish. Okay, retail investors are too much in the market, and that's a bad thing. And it's an election year, so the midterms, right? So the midterms in any given year, there's usually a little bit softness during the summer. Like you don't get the huge returns often in the summer. It doesn't mean you get negative returns, but in a midterm year, typically over the spring to fall period, it's a little weaker than normal. So we were already kind of set up for some time between now and the spring. That the market would start to have some event that would cause some weakness. Now, I didn't know, again, Iran, it's just totally random as far as I was concerned. But so, yeah, I think that we're going to get that pullback, and it's a good thing. It's very healthy. There's nothing wrong with what's going on. I mean, putting the event aside, that from a market perspective, we needed some corrective action to bring things back in line.
Okay, let's take a quick break. We will be back with Keith Richards to take your questions on technical analysis. Here's how to reach us today if you have a question. We're back in a moment. Stay tuned. Welcome back. We are going to start with an email from Kirby who says, can you give us an update on AZN, Astrazeneca? They've announced so many positive phase results lately. Astrazeneca, like many of the pharma companies, beaten down last year, making a bit of a comeback this year. What do you see? What are you called for?
Yeah, I mean, pharma's like that, right? So it's not like owning a super long-term chart. But, nevertheless, AstraZeneca has had a gentle uptrend. To the point, it did a bit of a breakout. It's up. What I like is it's broken its old high. Maybe it got a little overbought in that movement in here. If I clear the screen, it looks a little peaky, but sure. So maybe it pulls back to this old high, which I don't know what that is, but let's call it 85 or something. That might make sense. But so long as it doesn't really start breaking down and, make a lower high than that level materially by more than a few days, then I'd probably hold it.
You'd probably hold it.
Mm-hmm.
Okay, let's move on to the phone line then. Brian's on the line. He's in Cochrane, Alberta with a question. Hi, Brian.
Yes, good morning, Morella and Keith. I was wondering your opinions on Vermilion Energy. That's VET.TO. Thank you.
Okay, Vermilion Energy. How well do you know it?
Well, we've liked energy in general for a while, before Iran, in the BI level, years, months, I should say. I've been talking about it on my blogs and my YouTube videos and emails and everything. I like oil because it's been an overlooked area, and we're kind of contrarian investors. I mean, if you look at Vermilion, that is a very nice cup formation. So cups are kind of rounded. They're making lower highs, and then suddenly they start making higher highs and higher lows. And you look for like a little bit of a basin, which it's still kind of in. You can see the last really significant area was early 24 for resistance, but it looks like it's going to try to break it. And from my perspective on oil, before Iran broke out or anything, I've been talking about oil. I think it's a good place to be because it's an overlooked commodity. Everybody's been in copper and gold and stuff like that, but oil's been overlooked. So I think that this will break out, and I think that it'll be a good story going forward, even with all the volatility that oil has.
Do you think it was overlooked, or people were just avoiding it because the prices were so depressed last year?
Yeah, no, but this is what always happens, right? I mean, everybody wanted NVIDIA last year, and nobody wanted commodities and oil. Now suddenly everybody's wanting commodities, and so and oil was the particular beaten down. So it's starting to show some life and catch a bid, as they say on Wall and Bay Street. So I think that this is just a good example of a well-run company that will probably over the next year or two do very, very well.
Okay, let's get to the next caller then. Tyler is on the line. He's in Toronto. Hi, Tyler.
Hi, Morella. Thanks for taking my call. I want to hear what you have to say about Northland Power. I'm specifically asking about Northland Power, but more generally asking about how one would identify a base pattern. So Northland, so similar to what you just mentioned about the energy company, Northland looks like it's broken its downtrend, but how would one identify what you call a head fake and not resume that downtrend? Because the price action today is holding at its 200-day moving average, which is encouraging. Volumes seem to be increasing, but how much more than the average would you want to see volumes increasing? Just wondering how you would identify a base pattern, and how does Northland look? Thanks.
Okay, thank you for the question. Have a look at Northland Power, which has trended down, and as he mentioned, more recently it looks like it's trended back up from a down and perhaps broken the pattern.
Yeah, and Tyler, you're correct. You're identifying a base. And by the way, you want good instruction on for $15 or something like that, go on Amazon and buy my book Sideways, because I talk about all these patterns and stuff. But this is the basics. You stopped making lower highs and lower lows. That's really what a base is. Okay, like a down pattern is lower highs, lower lows, and then that stops happening. What you look for before we even look at the 200-day, we have to pay attention to what was the last high, what was the last low. We want to see that last high is taken out, and then we know we've broken out. Okay, at this point in time, we have to assume that it's still in a base, and until it's proven otherwise, it's in a base. But once it breaks that point, which again, these charts don't really show me the price, but it looks kind of like $25. So if it breaks $25 or something like that, you're probably off to the races with this. And I really like base breakouts. That's actually why I wrote my second book was called Sideways, because I like these sideways things that break out, because they can be hugely powerful. Like if it breaks out, it'll probably go to $40, but you have to wait till that happens.
Okay, so would you wait for it to get to 25 before you picked it up?
I would actually buy it through 25.
Okay.
I mean, buying it higher is a safer way, because otherwise you're still, kind of in that base. So you need proof. And I don't just mean 25. I mean maybe $26 stays there for at least a week or so, and then you buy. And you start legging, and you don't buy your whole allotment.
Got it. So. All right, let's get to Dan, who is in Wasaga Beach with a question in Ontario. Hi, Dan.
Hey, guys. Thank you both for taking my call. Keith, looking at Tourmaline Oil, do you mind giving me your thoughts on an analysis on the chart for us? Thank you very much.
Okay, thank you for the question. We'll pull it up right now. And this is the 5-year chart. What do you see?
Yeah, so Tourmaline, we own it. We like it. It's in that, big, long, sideways, go nowhere. But we were buying it at the bottom of the pattern. Pays a bit of a dividend. Like I said, we've been accumulating oil and gas names, and Tourmaline has some nat gas presence in it as well. It needs to break that, just like the last caller we were talking about. It needs to break out to prove. But if that's another way you can do things. Is you try to buy, if there's in a base sideways pattern, you buy at the bottom of the pattern, so you know exactly where you're going to stop out if it all goes wrong. But if it goes right and it breaks out the way we think it will eventually, especially with the way we view oil, it's a great place to sit.
From that chart, can you tell where you would or what you would consider a breakout point?
Yeah, sure. I mean, maybe we get a closer view, maybe with 3 years or something. But I can guess. It's okay. Like we have it on our system, and I don't have that in front of me right now, but I think it's around $70 is you need a breakout. So that's what it kind of looks like on this chart. So,
around $70 is when it gets more interesting.
Yeah, okay, actually, here's the close-up. So yeah, there go $70, yeah. Somewhere around there.
And it's at $65.90 today.
Yeah.
Got it. All right, let's take another quick break. We'll be back with Keith Richards, ValueTrend Wealth Management, taking your questions on technical analysis. Back in a moment. Welcome back to Market Call. Let's go to Elliot, holding on the line in Hamilton, Ontario. Hi, Elliot.
Good afternoon. I'm looking to introduce some international exposure. I was looking at the Vanguard Emerging Markets, VEE. The current situation in the world is giving me a price break, but at what levels could it go down to that you would consider support levels? And is the long-term trend up? Thank you.
Okay, thank you for the question. Can you first tell me how you feel about emerging markets right now?
We like everything international. We own, not this one, but we own an emerging markets ETF, have for 2 years, and it's done really well. We think it'll continue doing well. I mean, that might right away help the reader, or the viewer, I should say. It's in an uptrend. It's taking a pause. It had a big jump, early 25. So yeah, sure, it could consolidate here. This is what happens sometimes. You go into a downtrend and then things consolidate and break out. So long as the consolidation stays over its old highs and lows, I would expect that'll be healthy and it'll move up. I do videos, and I did a video called "Is the U.S. Losing Its Dominance on the Market?" And so people might want to watch that, because I covered all the international markets, all of them, including the emerging markets, and I like them all. Like, I think there's a reason to diversify internationally now more than ever. Answer
your own question. Is it losing its dominance? What conclusion did you come to?
Well, basically, if you look at the dominance was driven by the Mag 7s and other tech stocks, and they're going sideways. And there's only like really 4 sectors on the U.S. markets: utilities, staples, kind of the boring stuff, that are breaking out to new highs and making, huge headway, right? So that means that things are, it's not like bearish. It's just that, you have to be very selective on the U.S. markets, whereas you can almost kind of carte blanche by good quality international indexes, including mostly the developed markets. Like if you look at Europe and all them, like they're making new highs while the S&P flounders. So this is what I'm talking about. Is like, yeah, I like the international stuff.
Okay, let's move on to Alfred. He's in Mountain View, California. Hi, Alfred.
Hi, Mirella. Thank you for taking my call. Mr. Richards, your analysis on Berkshire Hathaway, very much.
Okay, thank you for the question. Berkshire, of course, people have been watching.
Yeah.
Well, hasn't come back after the announcement of retirement was announced, and people are asking why and will it?
Yeah.
What do you see?
Well, we sold it. I mean, we had it, during the upside. It wasn't specifically, like, we do everything based on technicals. I mean, we use fundamentals to evaluate value, but we do technicals based on our trades. So, when we saw the uptrend, like I'm always talking about this, higher highs and higher lows is an uptrend, right? So when that ends, you get out. So we stopped seeing that. So we got out. We're not bearish on the stock, but I mean, obviously the market is waiting to see what the new
Mr. Abel does, yes.
Is going to be able to do with the company and the performance and whatnot. So I think, for now, it's just consolidating. It's not a negative, but it's not a positive story. So I would just say, like, we're not in it. We sold it, and I would enter it if it broke out. I know people don't like to buy higher, but you got to buy higher to see that something is emerging. Otherwise, it could go sideways for another 6 months and you make nothing on it.
So would you hang on to it if you were already in at the higher level?
It depends on your objectives. Like we don't hang on to stuff. We want them to be going up, and if they break support, we break it. If they stop going up, then we sell. Unless there's a real compelling reason, like I talked about Tourmaline, which we do own. Why? We bought it at the bottom, and we think that there's a huge compelling reason on oil to go up over the next couple of years. But with Berkshire, it's too much of an iffy thing regarding, is the company really going to perform the magic of Warren Buffett? And the market's telling you that. So if you hold it, I'd say it's a 50-50. It's just my way of trading is I wouldn't own it.
Got it.
So.
Okay, let's go to Chad in Saskatoon. Hi, Chad.
Good afternoon, Morella and Keith. Keith, I've owned United Health Care from around $245, and I'm still up. Recently, it's pulled back. Technically, does this look like a healthy retracement where you would add, or is there risk for further downside? I'll hang up and listen. Thank you very much.
Okay, thank you for the question. What would you say continues to weigh on United Health, and what do you see when you look at that pattern?
So I actually wouldn't mind a shorter term chart, like a 3-year here, because I want to get nitty gritty on the stock. So we run two models at ValueTrend. We have this equity platform that we've been running forever, and then we have an aggressive platform. We only started about 3 or 4 years ago. And in the aggressive platform, we will do things like United Health, whereas we wouldn't own it in our conservative platform. Okay? So one of the stocks we never did buy because we were waiting for some confirmation that this base was real, and it's pretty debatable whether it is. I mean, if you bought really low, like the viewer was saying he did, he's doing well. But I mean, we always wait for these breakouts of bases. So I would say at this point, I mean, what's the downside? It could return to that old low. I personally would say if I owned it, I would probably not want to own it anymore until it broke out. Because, if it breaks out, then you've got tons of upside. Like if it breaks, whatever this is, say $300, just to be simple, your next stop might be $500, but it could be huge. But it hasn't done that. So as a technical guy, I'm not going to, there's an old saying goes, we don't predict, we do prepare. So I'm prepared to buy United Health if it breaks out, but I don't own it right now.
All right. Let's get to another caller then. Deborah's on the line. She's in Okanagan Falls, BC. Hi, Deborah.
Oh, hi. Just want to say, Keith, I'm rereading your book, Sideways, the updated edition for the second time as a refresher course. So thank you so much for that. My question today is on Banco Santander. I took a position on the pullback only to find a greater pullback today, and I would like your technical analysis on the entry points. The swing trade parameters kind of look obvious to me, so I'd like to see what the chart direction is and the exit points.
Okay,
right.
Thank you for the question. Banco Santander out of Spain and banking, obviously. So what do you see looking at their chart? Where would you enter?
So, Deborah, it sounds like you not only have you read my book, but you read my blogs because you mentioned the word swing trading, and it's one of the things I like doing. This is, the swing trading has a negative connotation. It means you're some sort of a crazy trader. It doesn't. You can trade stuff within huge moves, like 20% moves that are moving in a pattern. But whatever the case, this stock, I'm just roughly drawing the line here that maybe right around the $6 point that it's coming into seems to be an old resistance point and maybe new support. Again, I'm going to ask for a 3-year chart because I can zoom in a little bit. But to me, if this can hold that point, whatever it is, there we go. We're getting our 3-year. Okay, so kind of in here, it's right there. It's got to hold that $6 or so. Otherwise, it'll probably go down to 5.5, and then you really don't want to see 5.5 broken. So I would say that yes, if $6 holds and it bounces off, it's probably a great opportunity in the next coming days.
And when you say holds, you mean for about a week?
Yeah, I like to see 3 days. So I have in my book Sideways, I talk about minimum 3 days. So in this kind of short-term pattern, I'd say if you can bounce off of that roughly $6 point and stay above for 3+ days, then you're good to go.
Okay, Let's take another quick break. We're going to have a look at past picks from Keith. When we come back, stay tuned for that. Welcome back, and thanks for joining us. We're going to have a look at Keith's past picks from November 12th of last year, a few months ago. At the time, you recommended BMO's MSCI India selection, ZID on the TSX, 51.45 at the time to 44.84 today. So a return drop of 13%, 12% for total return. What did you like about this one? Have you held on to it?
Yeah, so right off the bat, we sold it because it violated one of our sell rules. Problem with, I do these shows once in a while, but I do talk about this kind of stuff on my blog so people can follow some of my stuff a little bit more near term. But that was the neckline, okay? So, it was in one of those swing patterns. So we needed it to bounce off. It didn't. It broke.
Around 47?
Yeah, around the 47.
Okay.
So we sold it a couple bucks below that. We sold it, I think it was around 46 or 45. And we're out. So what we originally liked is we thought that, okay, this swing pattern will carry on and it might go to the top or it might even break out someday. There was some fundamentals behind India. But, it broke, so we got out.
Are you watching it to go back in if...
Possibly,
okay.
Yeah. It really needs to, so when a stock breaks, it needs to get back to the old neckline, and then it needs to get above that before we're even interested. So, yeah, I watch it, but I have no interest in buying it right now.
Got it. Okay, let's get to your next past pick from November. Acon, ARE on the TSX. Of course, construction recommended 27.37 and now to 39.41, 44% upside, 45% total return. I imagine you've held on to it?
Yeah, we still own it.
And what do you still like about it?
Well, it's the opposite of what happened with India.
There's a lot of growth, yeah.
It kind of had a bit of a breakout. We were buying it. We buy in stages, but we started seeing, the trend got better, so we're buying it. Then that breakout.
Sort of end of 2025?
Yeah, right through 25, and then we bought a whole bunch on the breakout. Like we really like breakouts, as you've probably learned. So it's making higher highs, higher lows. Will it pull back? Probably. It'll pull back, but it's still in an uptrend. So we're not going to sell it in an uptrend. If something violated on our like a lower low or something or a lower high, then we'd be concerned. But it's not doing that. The fundamentals, like I have Craig Coyne, he's CFA with me, a vice president, and he does all the fundamentals. He likes the company. So there's no reason to sell it.
Okay, and you step in sort of in 3 steps?
Yeah, usually
typically?
3. Yeah, 3 steps.
Okay. All right, let's get to your last past pick from November. Invesco S&P 500, the equal weight ETF, so RSP, at 190.18 US at the time to 204.59 today, so 8% upside for return and total return. I haven't looked at the chart for this one. Are you still in it?
Yeah, we still hold it.
Tell me about it.
Well, again, I mentioned it earlier in the show. I said, if you look at the S&P 500, if you look at the NASDAQ, they're all going sideways because the leaders, the Mag 7s and the tech stocks, have all been treading water. They've been going up and down in a swing pattern, by the way. That's something you can trade. But as far as the market goes, so we didn't like tech last year. We didn't own anything we haven't owned tech for a year easily. And for good reason. We saw this kind of coming. We didn't know when it would happen. So we moved into the equal weight stuff just as a market position because we like the market. We just didn't like tech. So this is a way of, so instead of owning 8% of one of the tech stocks, it's 1/500th, so it's a more better, that's not proper English, a better representative of the market. And so we said, we like the market, so we bought this. It's a great way for someone to own an index.
And you're just going to hold on to it?
For now, yes.
Yeah. Okay.
Yeah, everything's for now.
Let's take a quick break. We're going to be back with more of your phone calls and questions for Keith Richards, ValueTrend Wealth Management. Taking your questions for technical analysis. Back in a moment. Welcome back. We want to go to Bonnie. She's on the line in Nanaimo, BC. Hi, Bonnie.
Hi, good morning. Can you please tell me what you think of Power Corp, as well as how it relates to these times when markets are inflated and then you have these pullbacks? How do you decide when to deploy new cash into Power Corp?
Okay, thank you for the question. We will pull up Power Corp right now and have a look at at the company. What do you see when you look at the chart you have up?
Okay. So I just have to say this. This chart is not as delicious as an Nanaimo bar. So I'm sure you guys...
had to get that in.
In Nanaimo,
You had to get
everybody
that
hears
in.
that all the time, I'm sure. So it's, I looked at this stock recently. Like, we scan through all kinds of charts because we're looking for ideas. The issue is there's an uptrend, and it could be maybe considered an uptrend, but it's looking a little weak right now. And we also use the 200-day moving average and trend lines, and there's some danger. I kind of drew a loopy trend line, so it's probably not actually breaking the trend line here, but I wouldn't jump on this stock. We decided not to at this point, okay?
Why was that?
Well, we don't like stocks that are going down. We like stocks that are, like, this was great right here back in 23. What a great time to buy it. In fact, Craig bought it in the income platform for the dividend. I think it was that one or the PWF one. But whatever the case, sideways, breakout, look at the great news that happened after that. But whenever you get a stock that's starting to move down like it did in, kind of 21, that could be the beginning of this, right? So I'm not saying that is. I'm just saying that we won't buy it right now until it shows. I like to see this do a base for a while and maybe start moving up. That's just the way, it's a safer way of trading.
And let me ask you again, where would you say that base is? 65?
It's hard to say because it hasn't formed a base yet. Like, you could say in here, oh, look, there's a base. It's, there's some lows that seem to be in roughly the same area. It hasn't established a base yet. So I would just say, well, maybe it'll turn around. It'll make a new high and it'll, but I personally wouldn't buy it right now.
Got it. Okay, let's go to Mark on the line in Montreal with a question. Hi, Mark.
Yeah, hi. Great show as always. I watch it every single day, and if I miss it, I tape it.
Tape it? That's old school.
Ooh, oh, wow.
Okay. What's your question today, Mark? Go ahead.
There's not much more loyal viewer than me. But the question is serious. It's for Mr. Richards. Listen, I'm a little frustrated with my company, Manulife. I sold about a third of my shares recently before the downturn, and I just feel that it always hits a resistance compared to other, like Sun Life, Great West Life, etc. And could you please tell me by your technical whether...
Yeah.
Okay, go ahead.
Sure. Okay. So there's I'm sorry, I can't recall, but we may own it in our income platform because Craig runs the income platform more just for getting the dividends. I'm not 100% sure, but I know that we were looking at Manulife for some reason just not too long ago. And so what I did mention to Craig that it'll pull back to probably about 45, which is this old resistance level. And so it seems to be doing that. It's not in any, for a long-term holder of this stock and just collecting dividends, it's not in any danger unless it cracks 45, okay? So that's what I'll tell you. So if you already own it, I mean, I think you mentioned he sold it, right?
He sold part
of
it of what he had, yes.
So which is fine. If it managed to hold, I'm using 45, it looks kind of like $45 here. If it holds that, bounces off, remember my 3-day rule, yes. I'd actually buy more because it'll probably then move into some sort of consolidation. And if you like the dividend and you like the stock, it could be a good play. At this point, I'm glad that he sold some because it hasn't proven to hold 45 yet, but I suspect it will, but we'll see. Just because I suspect something doesn't mean it will.
Okay. But you think you have it in the dividends, 4.1
Yeah, it's a good dividend. Pays more than a GIC or something. So long as it doesn't break down, it's a good holding.
Okay. Let's move on to Dennis. Dennis is on the line. He's in Victoria, BC. Hi, Dennis.
Hello there. Thanks for taking my call. I follow your blog, Keith, and you're our favorite guy in a bow tie. I would like to know with regard to Microsoft. This one, we've been wanting to add to our portfolio and take advantage of this drop. We've been watching it for over the month. It's sort of sideways around $400. Concern was that it might fall further, but it seems to be on a kind of a strong base right now. And wondering if you were thinking about adding to it, where would you kind of think would be the right time, like on a stock price rise or something like that? If you could just give us your view on that, we'd appreciate it. Thanks.
Thank you for the question. We talked about the fact that you pulled out of tech last year.
Yeah.
Early last year, right?
We sold Microsoft.
So would you dip back in? Is it something that's on your watch at this point?
Yeah, actually, I was going to say to Dennis, you and me both, we're both watching it because we know it's a great company. There's nothing wrong with Microsoft. It's just that the sector's out of favor. You don't argue with the market. You know, people want to argue with it, go ahead, but I'd rather just make money. It's got some support coming in. Again, these charts are terrible. To pinpoint exact support, but it might be 370-ish.
I've got, so 384 was the bottom.
Yeah, okay. So let's call that.
Okay.
380 or something like that.
And 380-ish, and it's up to 400 today. So where would you look?
I want to now see, it lasts a little while, prove, but it could be a great opportunity for two things. Remember we talked about swing trading. Like this was an uptrend. This was a consolidation. So it popped above that, which was good until it failed. So, that's what happens. I wish the stock market would do exactly what I think it should do, but it doesn't. So right now, I would say that if it can hold this area and successfully hold it for more than just a day or two, then your next target would be here, which might be in the low 400s. And that would be a pretty good swing trade. And then you watch to see if it can break that. If it doesn't, then you sell it. It starts to trend move down and can't stay there, then that's your swing trade. So you've made some money and you get out. Okay. So or if you buy it here and it fails, just like I did with the India ETF earlier I talked about, you just get out. Like that's the way we trade. We just are after reducing risk, maximizing profits.
All right. So. Let's take another quick break. We'll get you more of your phone calls when we come back. Stay tuned. Welcome back. Let's go to Jason on the line in Edmonton. He's got a question today. Hi, Jason.
Hey, good morning. How you doing? Thanks for taking my call.
Go ahead.
Yeah, just wondering your guest opinion on Cenovus with its recent acquisition and obviously with the turmoil going on here, but just long term, how does he see Cenovus playing out?
Okay, thank you for the question. Cenovus 3120, up 230% over 5 years. Yeah. You own it?
No. We own a bunch of other oil stocks, but I was just saying to you at the break that because the chart came up and said you're going to cover Cenovus next, and I'm like, oh, this is a great chart. Yeah. This is a great chart. This is everything I like in a chart. So this is like, I'm not going to get Craig to look at it later. So this was the swing trade. We've been talking about swing trades.
Yes.
This was the only way to trade. Look at for like 3 years, that stock went up and down like a yo-yo, right? And so you could trade that, sell, buy, over and over. But then it fell, and you say, okay, I would have got out right here. And then, but this point right here, on the as it started moving up, I probably would have bought it, and I probably would have actually sold it here. But on the breakout, we will buy back. We actually give things a few days, before assuming that it's going to fail. So okay. we probably actually would have held it through there. But now that it's like all this resistance, so whenever you look at resistance, that's people bought there. Somebody paid whatever that is, $28. So they remember. So that's why resistance happens. People start selling. I just want my money back. So they sell it as soon as it's 28. But then we took out all those $28 people. And new news that has driven the stock up. There's none of those guys are left. So there's clean air up above, and this stock could go as high as it wants as long as oil's good. So yeah, I'd say this is a phenomenal chart.
And you would buy in at the point it is today.
Absolutely. I mean, it might pull back a bit. Like they can always do that. They pull back to their necklines sometimes, but the overall, whether you buy now or you leg in now and it pulls back a bit, as long as it stays above that breakout point, I'd be all over this.
Okay. Let's move on then to Tony in Markham, Ontario. Hi, Tony.
Morning. I wonder your guest opinion on ZWU. I bought it about a year ago, almost at around 11. I think it's north of 12. It pays around 7 3/4. I wonder what your long-term outlook is for the next couple of years.
Okay, thank you for the question. That's BMO's covered call utilities, ETF.
Okay.
What do you see here?
Well, I mean, I mentioned at the beginning of the show that one of the problems with the internals of the U.S. markets, this is a Canadian equity, but it doesn't matter, is that it's right now just like 4 sectors are making new highs, and one of them is utilities in the U.S. So in the Canadian side, the utilities have moved well as well. and they're making new highs this year. Okay, well, not new highs since 22, but they're making, new highs on a relative basis for the Canadian sector. And it's in an uptrend. Now, this is the covered call, so it'll look slightly different than if you looked at, I think it's ZUT, which is their equivalent without the covered calls, okay? And it's, we like utilities. It's a sector that's doing well, and you want to be in the sectors that are moving. So I would continue to hold it. I mean, it just took out this level. It's going to have some noise coming up here, but that's still another target that it could hit. So there's no reason to sell it. I think it could, like whenever a stock does this, it'll pull back a bit.
That was back in 2022 when it hit that high?
Yeah, going back to, way
Got
back
it.
here. Yeah,
Okay.
that's right. And it could do that, even though in the near term, it's a little maybe overbought. It could pull back, but, I like it.
Okay. Let's go to Jacob on the line in Toronto with a question. Hi, Jacob.
Hi, good afternoon to both of you. I'd just like to ask about Shopify. It's all over the place. Where do you see it going for 2026? Has it established a base yet, or shall I buy it or not? Thank you very much and have a nice afternoon.
Thank you very much. So let's talk about Shopify. It does bounce around a lot, overreaching concerns about software and AI taking over. So when you look at the pattern here, do you think there's a base yet? Doesn't really look like it.
Well, there's no base yet. No, that's right. We've actually traded this one in the past. We've only put it in our aggressive account. We wouldn't hold this in our more conservative platform. It does big swings. Like there's one, and there's one, and there's one, and we're in one right now. It can do these big swings. It hasn't taken out this low yet, but it's going down. So would I buy it? No. What I want to see is on anything, let's take this look. Back in 2021, 22, it fell. It based a bit, and then it broke out. So you can buy it there, right? So this might base a bit and then break out. So that's where I would be looking at Shopify at this point. If I suspect that this old resistance point will offer a level of basing, so I suspect it may base, but don't predict, just prepare, as I said before. So we'll see what happens.
Okay. So. Let's move on then to Mark in Winnipeg with a question. Hi, Mark. Mark, are you there?
Hello?
Hi, what's your question today?
It's Bill.
Anyway, sorry, Bill. Go ahead.
I'd like to ask his opinion on Taiwan Semiconductors.
Okay, thank you for the question. Taiwan Semiconductors. I know you said you're out of tech.
Yeah.
But let's have a look at Taiwan. Tell me what you see.
Well, and this hasn't been too bad. TSM. Uptrend, nothing wrong with this particular technology stock. I mean, I've been more biased against the MAGs because they just went too stupid. But now, that's a pretty sharp move. That was a pretty sharp move. That was a pretty sharp move. When you get these sharp moves, you get corrections. So long as it doesn't, take out old highs and stuff like that, the trend is your friend until it ends. So I would say there's nothing wrong with this picture. It might pull back a bit more because it did get a little bit of, parabolic looking, but nothing wrong with it.
All right. That was for Bill on Taiwan Semiconductor. Let's take a quick break. A new picks from Keith when we come back. Stay tuned. Join us tomorrow for Market Call. John Zechner will be on the show, chairman and founder of J. Zechner Associates. He'll take your questions on North American large caps. And if you missed Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Let's get to new picks from Keith Richards. Brookfield Infrastructure is where we start, BIPC, on the New York Stock Exchange. What do you like about Brookfield Infrastructure specifically as opposed to the other Brookfields?
Yeah, so this is kind of the offshoot from BIP, BIP.UN. So we own actually both. We own the BIP we have for some time now in our income platform. So we have an income platform, an aggressive platform, and our equity platform. The income platform is very dividend orientated. So this one, the offshoot, BIPC, they're supposed to be the same company, but the chart's slightly different. So we look at it as a catch-up trade, not the stuff you put in your French fries, but the catch-up where it catches up. And we think that it'll get, like if you look at BIP.UN. It's at the top of its trading range.
Yes.
And this thing is not. So we're just looking at it as like I said, a catch-up trade. Good company, you get a dividend. It's, we think it might get very close to $100. We'll probably sell it at that point.
Okay. When did you dip into it?
Just like a week or two ago.
Oh, really? Okay, so it's due for you. And sorry, that was the TSX we had up, not New York. Okay, let's get to your next top pick then, which is Atkins Realis, ATRL on the TSX, engineering firm, also been bouncing around. When did you pick it up? What do you like about it looking forward?
When did we buy it? I think we've owned that for, I'm going to guess, between 3 and 6 months. I can't remember.
Okay.
It was a number of months ago, okay? It's in an uptrend. We typically, in an uptrend, we're higher highs, higher lows. So you're like buying it on a dip. We probably bought it, it would have been like late 25 because we buy things in an uptrend when they come down to the trend line and hit the 200 or whatever. And then, so we bought this one. We legged in a couple times since.
Tell me about what you saw in late 2025 that you liked about it.
So, uptrend. that's
uptrend, but it's still bouncing around, right?
Oh, yeah. So long as the old highs are not being taken out, the old lows are not being taken out. Craig does his 2 bits on the fundamentals. He said the company has lots of projects in the making.
They've got a backlog, yes.
So, he said, let's pick it up. So we picked it up. And so far it hasn't taken out the last high, but, it's so far doing okay for us.
Because he weighs in on the fundamentals and you do technical analysis, how much weight do you give to the fundamental?
Well, the fundamentals have to be there to support, so we call it the why. So I'm looking at the what, like it's breaking out, it's on an uptrend, it's whatever, consolidating. But you got to have a why. Why will it go up, right? So he takes a look at the company. What is the business doing? All that kind of thing. Is there a reason that this breakout will actually continue rather than just being a flash in the pan, right? So the two work hand in hand. I search through a ton of stocks, and I actually have a breakout program that I use, and I'm always finding breakouts. Then I throw them at Craig. I literally give him like 5 to 10 names a week. And so he'll then look at them and reject most of them and say, this fundamentally has a reason to keep going. So and then it gets added to our watch list and we try to time it. And if we have a reason to hold cash, we're not buying anything. But if we say, okay, now we're going to go in, then I've got a list of stocks that have been Craig approved that also have Keith approval.
So would you say it's 50-50?
Yes. Yes, it is. It all starts with me on the breakouts and the technical formation, but Craig has to approve it before we will buy it.
Got it. Okay.
So, yeah.
Let's get to your next pick then, which is Archer Daniels Midland ADM. And this is a transportation sort of storage company for agriculture?
Yeah. So I've been talking a lot about commodities for literally like 4 years now, and I've been right. brag. But, we just sold some of our copper just last week. Why? Because we just made a fortune on it. Like we sold some gold about a month ago. Why? Because we were early on. We were buying gold at like $2,000. Now it's like double
5,000,
right? Yeah,
change,
5,000, right? So like this, people get excited, and when we take some profits out, we haven't eliminated these positions. But we're saying like, look at how much copper's moved. It's crazy. So we're saying like, this is going to pull back. So what is unpopular? So we're contrarians. So we looked at the softs, the agricultures, and it's really hard to buy commodities. You can buy ETFs, but they're really inefficient. They're usually using forward contracts, and they're awful. So instead, we're looking for, how else can we play the commodities? So this is a company that is involved in the food business. They produce boring things like flour, from wheat and stuff like that, and yes, ship it. So it did a bit of a breakout, so we bought it recently. And we think that that's sort of just like the oil producers are just breaking out now, some of them anyways. So that's why we're buying this one.
And the fundamentals agree?
Craig likes it.
Craig likes it. Okay, that's important. Craig likes it. Okay, that is Archer Daniels Midland as the third top pick from Keith Richard. We will have to leave it there. We're out of time. Thanks for your time.
Okay, great to be here.
And we will be back again tomorrow for Market Call. Thanks for joining us today. We'll see you back here tomorrow, same time, with Mr. Zechter. Take care.